Welcome to the Money and Meaning Show with Jeff Bernier, a show dedicated to helping you gain the confidence and freedom to lead a life of personal significance and help you get your actions and resources in alignment with what matters most.
Well, hello and welcome to the Money and Meaning Show. So glad that you decided to check us out today as we have our periodic conversations around money and meaning. And this show is really all about helping you uncover what really matters, what gives you purpose and meaning and what gives your life joy. But importantly, how do we build the financial capacity to go pursue your vision of this meaningful life? So how do we put the wealth management strategies in place to help you create the clarity and confidence to live a great life? So I'm Jeff Bernier. I am your guide and Sherpa today as we have these conversations. And as we think about comprehensive wealth management or holistic wealth management, there are a lot of things that we talk about. We talk about general financial planning topics. We talk about investment management and how do we build efficient portfolios that have a reasonable chance of funding those things that matter most to you. We talk about estate planning and wealth transfer. We'll get into things around college funding and education funding and how do we help those that we care about and the next generations get prepared for life. And we talk about tax planning. There's so much we talk about. And today we're going to put the spotlight on another really critical area that we'll just kind of term as risk management. And I define risk management on our corporate website as a risk management plan can free you up to enjoy your journey by knowing you protected your income, your assets, and your loved ones. And the wealth management profession know that we have to build a base. We have to protect those things that we own or our future income or the people we care about before we have the luxury of building strategies to live the life that we want to live. My friend Brian Portnoy calls it a two-step dance. Step one is to survive. Step two is to thrive. And so risk management is largely about how do we protect and survive. My friend and consultant Nick Murray always says that we need to insure against things that can go wrong so we have the luxury for investing for things that we hope go right. And so today I'm really excited to have a guest who's an expert in some aspects of risk management. And so we're going to dig in a little bit here with my friend Hunter Ewing. So let me give Hunter a proper introduction and we'll get cranking, Hunter. I'm really excited to have you on. We work with Hunter and his firm extensively in the work that we do. And I'm really, really happy to have him on. So Hunter Ewing III is a co-founder and director of the Private Lines Insurance at Higher Ground Risk. It's a division of the Higher Ground Company here in Atlanta. Prior to co-founding Higher Ground Risk, Hunter worked at Citi Private Bank here in Atlanta, where he helped start the Southeastern office. He started his career with Raymond James, where he was in the investment banking group. And like me, he's a graduate of the University of Georgia and the Macaulay School. So welcome aboard, Hunter. Great to have you with us.
Jeff, thanks so much for having me. I'm thrilled to be here. And that was a great summary. I mean, I'm not quite sure I could say it any better myself. And just, thrilled to be here, thrilled to have the opportunity to speak to our audience today about some really important topics that are, making themselves known in the private risk management world. It's an ever-changing world. It's interesting. And like you alluded to, it's super important. And so I look forward to chatting more about it.
Yeah, without question. I mean, we know that, like I said, we've got to protect our assets and our incomes and the people, take care of the people we care about. And, and oftentimes it's a subject that a lot of people don't really want to talk about. It's not as interesting and exciting to some as, investment theory or, beating the market, but so critical and therefore really helpful to have a professional that knows a lot about it. Before we start though, Hunter, I always like to get personal. So if you don't mind indulging us a little bit, I'd like the audience just to know a little bit about you and your family. So kind of tell us about yourself.
Yeah, absolutely. Like you alluded to, went to Georgia, Went to Macaulay School. I'm born and raised here in Georgia, in Sandy Springs, and went to a Catholic high school prior to leaving, going to Macaulay up in Chattanooga, Tennessee. Went to Georgia, and then after Georgia, had my time with Raymond James. Lived in Memphis, Tennessee for a little while, which was awesome. I'm a big barbecue food connoisseur, and so I didn't really know anybody in Memphis, and so kind of I really put myself into the barbecue world. I measured all the barbecue restaurants off of how good were their rack of ribs, and so if anybody ever needs any sort of recommendations in terms of where I would go get ribs in Memphis, it would be the Germantown Commissary. It's just
good to know. The Germantown Commissary.
One of my
So not only will we get risk management advice, we'll get barbecue advice today.
That's right. So then moved back here, like you said, started with Citigroup through a friend of mine, was connected with them, and then spent about 4.5, 5 years there, and ultimately joined our family business, which is High Ground Company, and started the personal lines division. My wife and I, it's actually a timely question. It's our 2-year anniversary today. So we live in Sandy Springs in a house with a little dog, no children just yet. And couldn't be happier. So it's an exciting time, and we've got a lot of good things going on, and just, yeah.
Very cool. Well, what I've tried to do with this show since I started it, I guess back in 2018, was just really help people focus on uncovering sort of their why, what gets them excited about life, and, what is their purpose, and what are they, what matters most, again, and then we can marry that with wealth management to try to create the clarity and confidence and the freedom to go pursue their calling, I guess.
Yeah.
So how would you, this is a really hard question to throw on you, but tell me a little bit about what would get you excited about either your work or your life. What's your why?
I really enjoy the business of getting to know people. Having a career in wealth management was exciting. And when I was at Citigroup, we were working with very interesting clients, all with different backgrounds, and they had built companies, and they were part of families that were doing really cool things. And fortunately, I have a client base right now, and continue to grow a client base that also has really cool stories to share, and they're taking cool trips, and they're doing awesome things, and they're giving back to the communities and in really interesting ways. And so, I look at kind of what I do every day as a privilege, as a privilege, getting to interact with these really cool families who do all sorts of different things and have really interesting stories. And I get to glean a lot of wisdom off of how they've built a business and how they've raised their children, and where should I go for my next vacation, or where should I try to go for my next vacation? All those sorts of things, Jeff. I really, I view the insurance component of what I do as one small piece of the pie. It's a great thing being able to, and it's an honor being able to earn a client's trust and having them, look to you for guidance. I really enjoyed that component of it. But taking it even deeper is just really building the connections with families that, them in such a great, intimate capacity that it's fun. It's fun being able to hop on a phone call and catch up with a client and ask them how, their daughter's wedding went, and all those sorts of things are just really cool. So again, I view kind of my why as really just getting to connect and with families, and getting to learn from them, and getting to help them, protect, of course, what they love the most, which is, some of the stuff that they've worked very hard to obtain and build. And so I really enjoy my career. It's a great question. Thank you for asking.
That's great. Yeah. Well, we're fortunate being in professional services like we are, because we do get to enjoy the journey that our clients are on, both in good times and bad. Obviously
exactly.
Be a resource when things are difficult. We have kind of a tongue-in-cheek goal to be the first call.
Right.
Now, obviously, we're not the first call. They'll call their family members, but when something great happens or when something difficult happens, we'd like to be the first call. So relationships sounds like a big part of your work as well, and that's
Absolutely.
fantastic, because at the end of the day, that's what this is about for you. It sounds like is just helping people, and you do it through personal lines insurance, but it's really about helping them accomplish what matters to them, and that's really cool. So tell me, how did you were in, you're in the financial services and investment banking. How did you get into property and casualty in particular? Because I know your family business does other types of insurances, but what drew you to the personal lines or property and casualty in particular?
That's another good question. I view my career path as almost I kind of am where I am almost through a little bit of a process of elimination. And if it's funny, I was actually connecting with the client's son pretty recently, who was in his first role, and he was asking me, hey, what do I make of this role? I said, the first job I feel like for me was almost just to learn what I didn't like. It was
Yeah.
and Raymond James was a wonderful place, a great company, well run. What we were doing was interesting, but I realized that the clientele that we were working with, which was primarily government institutions in Georgia, was just not exactly where I wanted to be for the rest of my career. I learned a lot of great stuff. But again, I knew that I wanted to, when I kind of thought about, hey, what do I want to do next? I want to work with an individual. I want to work with a family. I want to build a relationship. And so that's what I did with Citigroup. And it was a wonderful experience, had great teammates, and built our office and grew our office, which again, very, very, fortunate to say. But at the same time, Citigroup is a big company, and there's a lot of good that comes with that, and there's also can be some frustrations, and so I knew I wanted to move into a smaller business, but I really liked working with families. I liked working with a mom and a dad and hearing kind of their concerns, and so and at the same time was not necessarily married to the investments business, and so. At about that time, my dad had said, hey, we'd be interested in opening up a new line of our business. And the timing just worked out really well.
Right. Right.
It was a great timing. And again, the transition has just been great. It's been about 2.5 years, and certainly interesting, learning something every day. But again, happy to say that, what I do every day is really exciting. It brings me a lot of happiness, and again, you just kind of learn along the way, right? And ultimately you find kind of what I think you're supposed to do. So
that's right. Well, let's talk a little bit about the nuts and bolts of it. So when we talk about property and casualty coverages, what are the dangers or what are the perils that we're trying to manage the risk on? What are the various lines, I guess, is another way to think about that we need to think about in terms of our personal balance sheets. And so what are the perils that the typical property casualty portfolio will be protecting?
I spend probably 85 to 90% of my time writing home insurance, auto insurance, and umbrella insurance.
Okay.
And on top of that, and kind of making up the rest of that 100% would be valuable articles coverage and flood insurance and boating insurance. And, really, outside of that, that usually makes up what we do here at High Ground. And when you ask, what is property and casualty insurance, personal property and casualty insurance, that's usually almost about it. And when we think about what are we insuring against, right? Well, we're insuring against these perils, these causes of losses. And we can certainly look at that from like a home insurance standpoint. We can say, all right, well, we're going to insure against a storm, or we're going to insure against a water break. If a pipe bursts in your home, we're insuring against that. When we think about, an auto policy, right? We're insuring against collision, or perhaps maybe some sort of comprehensive coverage where, there's a tree that falls on the car, or perhaps maybe you're involved in a hit and run, and you need some sort of coverage there. And so, there's all these different components of perils, if you will, that we're actively insuring against. Of course, liability is a big topic as well. And we think about, how that kind of goes hand in hand with collisions. And there's an increased risk when someone has a dog in the house or a pool in their backyard. And so all of these kind of go into this puzzle, this equation that we're trying to solve for, and make sure that our clients are best prepared for anything that comes their way.
So it's really about homeowners, automobile liability, then recreational vehicles, whether it's a boat or things like that.
That's correct.
Yeah, so that's the main ones that you deal with. Are there others that people need to be aware of, or is that what most people have to deal with?
We see a lot. We certainly recommend, Jeff, everybody take a long, hard look at their, what we would call their valuable articles, their collections.
Okay.
A lot of times
Right.
a lot of times that pertains to a piece of jewelry or perhaps maybe a piece or two of art. Those specific items, if you will, are usually not covered in whole by someone's home insurance policy. If
By the standard policy.
Exactly, by a standard policy. And so, let's just say that someone had a really nice engagement ring, and it went missing for whatever reason, if it was stolen. Unfortunately, they're going to be able to claim probably only a portion of that, a small portion of that, if it's a really nice ring on their renter's policy or their home insurance policy. And so, we want to make sure that that portion of someone's collections and something that they've invested a lot of money into is covered. And so that's something that a lot of times we'll have a conversation with someone, and it may not dawn on them that this is an important thing to consider. Another thing that we can absolutely chat about a little later, but we can certainly mention it right now, is flood insurance. Flood insurance is a huge component of our conversations right now. You think about, Jeff, kind of the way that I guess America is being developed, and folks are consistently moving further out of big cities. Topography is changing, and the surface water is not necessarily flowing the same way that it used to a couple years ago. And so what we've seen is that more and more folks are starting to get affected by floods in these big hurricane type situations. Helene is a great example. Hurricane Helene that came through the Southeast fairly recently, a few months ago, really wreaked havoc on a bunch of families and a bunch of folks who were not in flood zones. But
Right.
Again, just having a flood policy, especially if you're not in a flood zone, having a flood policy is a very inexpensive tool, and it can certainly protect against a lot, because again, that is excluded from most homeowners insurance policies.
So there are riders that you can put on it that will cover it. Is that
usually what we do is a separate policy completely.
I see. There are separate flood policies that you would,
Exactly.
for someone that has that concern.
Exactly.
Yeah. Gotcha.
And it might be, again, if depending on how it goes, if you're not in a flood zone, it might be, a couple $100 a year to buy a flood insurance policy. But again, in the vein of looking at all the different risks out there, a lot of people would say, well, I'm not in a flood zone, I don't need one. And you know what? There's I guess some truth to that. But at the same time, more and more folks that are not in flood zones are starting to become affected by these weather events, and it's just a really good thing to have. So
yeah, and part of that you think is because of development
for sure.
Yeah.
Development. I mean, we've seen perhaps maybe a neighbor is doing a renovation on their home, and perhaps that changes the course of the way the water flows down a hill. And, that could affect you. That water could wind up in your basement.
Yeah. Interesting. Well, other changes, I mean, that sounds like something that may have changed recently or is more important today maybe than it was in years past. Are there other changes in the industry that you've seen recently that are of note, or is the types of things that you're doing today were the same types of things that we were doing with property and casualty insurance 10 or 15 years ago?
I would say fundamentally they are still the same. There's a lot changing in our industry on a pretty quick basis and pretty rapidly. In different insurance companies right now, Jeff, especially when we kind of look at Georgia, and again, that's the state that you and I live in, right? So, we take Georgia and kind of look at it as a microcosm, perhaps of kind of the broader U.S., perhaps Southeast. But Georgia in of itself right now is undergoing a lot of different changes in their insurance companies. We've seen insurance companies tighten up their underwriting guidelines. We've seen certainly insurance companies make policies, especially homeowners policies, more expensive, taking rates, increasing inflation protections, and so all of this is changing pretty dramatically and pretty rapidly. I mean, again, we kind of go back to I look at some of the companies we work with, and their underwriting appetite is not the same that it was a year ago, 6 months ago, 2 years ago.
Yeah.
And
much more stringent,
exactly,
I'm guessing.
much more
Yeah.
stringent, much more, they have a much more critical eye to loss history. So again, fundamentally what we're doing is not different, but at the same time, the circumstances are different, if that makes sense.
Yeah, well, absolutely. I mean, I hear stories about people trying to get, homeowners insurance in Florida, post hurricanes, or on beach property, or even, I know a lot of the industry is challenged out west where their wildfires have been a big problem. And, they won't even insure a home if there's trees, anywhere near the house. So I guess that's true everywhere.
It is. I mean, it's just becoming increasingly more difficult. There was actually, Jeff, and I was going to mention it, but there's a really interesting article that was today is the 17th of December. Last week, there was a really interesting article featured in the Wall Street Journal. I believe it was Thursday morning. And it basically just spoke to a lot of what we're alluding to right now. And it was how home insurance across the entire country is continuously rising. And really the reason for that is these significant severe weather events, but also Americans are moving into more catastrophe prone areas.
Right.
They used a example where basically Dallas, Texas, the fastest growing suburb in Dallas, Texas, is ground zero for hailstorms. And so, there's been, I believe it was 12 hailstorms where insurance companies have lost a collective $400 million in just hail claims this year. We certainly see a bunch of hail claims here in Georgia as well. And so, but again, moving into these more disaster prone areas, folks like to move out west. They like to move to Florida. They like to move to coastal Georgia and South Carolina. And that does come with risk. I mean, that really does come with risk. Right.
Well, two things come to mind to me when we're talking about this is, one is because prices, you can build here. You can get a home here. It might be cheaper, but there's risk.
Right.
Where, a more desirable place, you can't afford it because prices have gotten out of hand. But the second, just from a financial planning standpoint, maybe we have to change our assumptions about what it costs for a second home because the cost of insurance is potentially much higher if you can get it. I mean, I know there are many carriers that aren't even offering coverages in certain areas. I haven't done a detailed study, but the last time I looked, the insurance industry is profitable, but it's not obscenely profitable. So, I mean, they're doing what they have to do to stay in business. I guess, we can be unhappy about higher premiums, but if they don't stay in business, they can't pay the claim.
That's exactly right. I mean, I tell clients all the time that unfortunately, insurance companies they are for-profit companies. And, specifically, Jeff, when you look at a specific line of business, like one of the companies that we represent, actually a couple different companies that we represent, their homeowners insurance lines of business in Georgia are unprofitable. Their claims are outrunning the premiums that they're bringing in. And so, folks are wondering, well, hey, why is my premium increasing every year? And the reality is that they're trying to get some money back in their pocket so that they can have an equal ratio of losses to premium brought in. And so you're exactly right, hitting the nail on the head in terms of
it's challenging.
Exactly.
Yeah. So are there particular misconceptions that people have about their insurance that are common, or or do most people sort of get it, in terms of, I need to insure these perils. I know this is the cost. I hope I hope I lose money on it. I mean, the expected return on insurance is negative, and you hope it's negative. You
Right.
hope you pay premiums
Absolutely.
for 30 years and never have a claim.
Absolutely.
So my expected return is negative.
Right.
My hope for return is negative.
Right.
But are there misconceptions that people have about their insurances that you see that are common?
As I'm reflecting here, I wouldn't classify this necessarily as a misconception, but I think you really did a wonderful job of explaining kind of the genesis of my answer here in your opening comments, which is we at High Ground try to approach someone's personal insurance as a important part of someone's overall financial plan. When we look at most Americans, the interest in their home is one of the biggest assets that they have, right? And
right,
you got to protect it. You got to protect it, and you got to protect it properly. When we think about other risks out there, someone's investment accounts with tandem growth or whatever the case may be, a liability, one bad liability incident can really throw a wrench into someone's overall plan if they're not protected properly. And so, again, we try to approach and educate our clients and say, hey, this is an important part of your overall financial plan. And on the backs of that, working with an advisor, and we're not the only ones here in Atlanta, but working with an advisor who's experienced, who knows what they're doing, who can tell you what a policy means and really put together a plan for anyone is important because, there are a handful of situations where someone goes on to a insurance company website and they're, the premium's moving directly with what they're picking. And naturally they want the premium to be lower and they don't necessarily know what the coverage is.
The trade-offs
that come with that. And, next thing you know, unfortunately, there are some losses that do happen and it becomes a really tough situation. And so, educating clients in terms of, hey, here's what this is actually doing. Here's the implications of your auto policy as it stands today. Here's the implications of your home policy as it stands today. Those are the ways that we approach, our client conversations and really trying to get the right protections in place to, again, just make sure that we are doing our job in terms of contributing to, our clients' overall financial well-being. So,
right. Well, I mean, we're not totally objective about this, but I believe that most people benefit from professional advice.
Exactly.
In those areas of expertise that make sense. And one of those areas of counsel that I find that can be most helpful in property and casualty is just trying to figure out the amounts. I mean, it's one thing to have access to the carriers that you need, the companies that you need, but it's just not that easy to just go on a website and plug in a few numbers and know, do you have the right amount of coverage? So what type of process do you guys go through when you're helping people figure out, the limits and what's covered and what's not covered? Is there a process or is there more formulaic type approach?
So it's in part formulaic. We have access to a number of different, what we would call replacement costs. And I'm just talking about home insurance for right now.
Okay. Right.
But we have access to a handful of replacement cost estimator tools. And what we do, Jeff, is try to glean as much information as possible from our online resources. A lot of times that can be a county tax assessor, it can be a Zillow, it could be a Redfin, it can be previous policy information that comes from someone if they're willing to send it. But we try to get as much information and then come up with an estimate of a really exact estimate of what we believe the replacement cost of the home will be. Now, some insurance companies will actually send out an inspector to the home and they will verify that replacement cost. They will say, hey, this home, we underwrote this home at $1 million and it might be $1.1 million, or it might be $950,000 of replacement cost. So those inspections do serve a valuable purpose in terms of making sure that, you and the insurance company, the client and the insurance company are on the same page. Of course, when we think about umbrella liability risks, right, that's an important topic. And how do you come up with the right number? First and foremost, our advice is, if you have a financial advisor, that's a great person to consult with, because 9 times out of 10, they have a much broader understanding of someone's total financial picture than we do. But again, kind of the old rule of thumb there, Jeff, is something consummate to someone's net worth. And that could be the interest in a home, their investments, their savings, all of those sorts of things. And we usually would say, hey, try to match that number as close as possible. And there begins to get a sliding scale once you get up over $10 million in terms of availability to higher limits. And, whether someone who has north of $10 million is willing to assume some of that risk on themselves. But again, that those are conversations that, again, we try to have the financial advisor consult with a little bit and weigh in.
Right. It's a collaborative approach with other people on the team, it sounds like. So I have to, I know your firm because we work together, but for the audience, tell them what a process might look like if they worked with a professional like yours on the front end. So what, if someone says, look, I'd love for someone to take a look at my portfolio and make suggestions. That sounds really tedious, and a lot of people don't want to do it, even though it might either save them some money, or worse than that, they may find they have a significant gap that could cost them a lot more than they're aware of. There's nothing wrong with self-insuring what you can afford to self-insure.
As long as you know you're doing it.
Exactly. You want to make sure it's a conscious decision, not a default because you didn't pay attention to it. So walk me through a little bit how you work with a new household if they want an appraisal and they need some counsel on, take a look at what we've got and whether it's appropriate.
Yeah. So pretty much any insurance policy out there will have what's called a declaration page. This is usually the first probably 4 to 5 to 6 pages of an insurance policy. Some insurance companies are a little different than others, but again, by and large, there's the declarations pages that come in from the insurance company directly. That provides us with a lot of information in terms of how someone is currently insured. And from there, what we do is analyze those pages to basically educate someone on how they're insured. And I would tell you, Jeff, that it's amazing sometimes how folks just don't know how they're currently insured. They haven't had it looked at in a long time. They don't really know what the limits are doing. They don't really know what the deductibles are doing, the premiums. And so again, just kind of educating someone and saying, hey, here is what your policy is actually doing and protecting against. It is a great starting point. And again, we just need the deck pages to do that. And then from there, what we'll do, Jeff, is put together either a short presentation or a short deliverable. We'll go over it with let's just say you, the prospective client, and we'll have some takeaways, and then we'll make a recommendation. And sometimes that recommendation is within high ground, we actually can't do anything to improve those policies. But I do think there are a couple recommendations that you should probably go back to your current agent and just ask them, just ask their opinion in terms of, does it make sense to tweak this deductible, or does it make sense to add this endorsement to the policy? What's the premium associated with doing that? And again, of course, if there's a recommendation where we feel that we can provide a better, more comprehensive solution, we will certainly make it. But usually it's a pretty collaborative approach. We want to first educate clients on what their policies are doing, want to see how they're working, and then from there we can come up with any next steps that we take together. We'll chart them out.
Gotcha. And most people in your profession are compensated through commissions on the products. Is that normally? So you're providing this consulting, but you're compensated through the products that people place.
That's
with
exactly
the various
right.
carriers.
We don't charge a fee for doing a review. We are compensated by the insurance companies when we put a policy in place.
Got you. And do most companies like yours have a portfolio of carriers, or are they more captive, like with one carrier?
It's a great question. There's two
Or the
different
both?
kinds.
Some of both.
There's your captive agencies. You alluded to that. Of course, that would be like a State Farm or an Allstate. Farmers is a good example. And then there are independent brokers who represent a handful of different insurance companies.
Gotcha.
We represent 10 different insurance companies, and we can mix. And the beauty of the independent model is the fact that we can kind of mix and match those carriers as needed. We can look at them, across the board and look at them pretty transparently, so that hopefully we can bring as many different solutions to the client as available. Sometimes in this market that can be one or two, but hopefully again it can be as much as 3, 4, or 5. So that way they can really see that, hey, we did the work, we priced it out with a bunch of different carriers, and this is clearly the best option for me. And so, of course, I'm a little partial when I say that I prefer the independent model, but I do think there are advantages, and I like the way that if I'm a consumer, I like the way that I feel represented to the marketplace, the broader marketplace, by an independent agent. And then also, right, I get the advice, from different insurance companies. We as High Ground get multiple different perspectives on the market from the insurance companies we work with. One company might be doing something different than another company, and so it is helpful to kind of have all those different feeds of information coming in.
Well, that makes total sense. So what are you doing with your clients that are challenged with high risk areas like Florida if they were trying to get insurance? Are there specialty carriers that are down there that are in those areas that you have to kind of go out to?
Yeah, there certainly are. I would say that when we look at Florida, right, and coastal areas, if someone's in the market to buy a home, right, and usually from an insurance standpoint, and again, this is all else equal, all right, this is not taking into account flood zone or whether it's but newer construction is really an advantage to when someone's looking at home insurance in a coastal area. As new as possible is wonderful, and along with that is the wind mitigation, I should say. When we think about what are we advising clients to do? It's invest in wind mitigation, storm shutters, impact glass. And Jeff, I'll tell you honestly, if someone does not have wind mitigation in Florida, it presents a real challenge for us to be able to find a solution. Insurance companies,
the insurance carrier,
exactly. Insurance companies are really big on making sure that impact glass and storm shutters and the way that the roof is affixed to the home, all of those things are important in terms of driving down premiums, and of course making sure that someone's home is adequately protected. On that same vein, taking advantage of as many discounts as possible is something we're always recommending to clients, whether that's here in Georgia or in a coastal area, but particularly in a coastal area where the premiums can be, oftentimes much higher. Things like generators, water shutoff devices, alarm systems, these sorts of devices where an insurance company can offer a discount, they certainly help bring down the premium. And again, everybody's interests are aligned here. They'll pay for themselves over the course of time, and hopefully be able to mitigate, a theoretical loss over time too. So those are certainly the conversations that we're having. Higher deductibles, of course, is something, that we're, especially down in Florida, ratcheting up deductibles, all that good stuff.
Yeah. I mean, I think it's sort of a catch-22 on, you buy an older home in Florida, you might get a better price in buying it, but your carrying costs for the next 20 years could be a lot higher between insurance premiums and maintenance and replacing things. And so I guess, in planning, you've really, as you're shopping for properties, you almost need to get proposals on what the insurance costs are going to be when you're shopping for properties. From a financial planning standpoint, as I mentioned, when you're trying to figure out what is this going to cost me annually to live in this particular opportunity that I'm thinking about buying. I
Yeah.
know I have a friend who's building a house down, not too far from it was around the Gulf, and he's really investing in some of the latest and greatest
Yep.
in terms of the structural stuff.
Absolutely.
And he said, I just wanted to be solid, and I don't know if he was thinking about it from the insurance perspective, but I can imagine when he does go out and gets bids on insurance, he's going to look a whole lot better than someone who didn't put those types of structures in place. So that's good. That's good counsel.
Absolutely. And you think about too, on that topic of your friend buying the home, renovations are a great time to implement some of that stuff, right?
Right.
I mean, an insurance company loves a new roof. Of course, if you make a claim for it, that's different. But at the same time, putting a new roof on the home, if you're doing a renovation, putting in some different preventive measures, some risk mitigation technologies, and there's so many of them out there right now. Just easy ways to invest a little bit of money and then have that money come back to you in the form of lower insurance
Premium savings. Right, right. Well, this has been really helpful, Hunter. I mean, I know you do this every day; it's second nature to you. But for most of us, we don't pay much attention to these things except once every year or so. So you go through this process with a new prospective client. Maybe you help them get things in place, or you send them back to their agent to just make a couple of tweaks if it doesn't really require a full overhaul. But you put it in place. How often should they be looking at it again?
I usually recommend once a year.
Okay.
And sometimes again, we have clients that they have it more on a little bit of I'm not going to say autopilot, but they don't have an interest in reviewing it. And then we have other clients that I speak with, multiple times a year. I recommend at least once a year, just having a 15, 20-minute conversation, us asking a few questions, us telling you, here's what to expect from a premium standpoint for the upcoming year.
Right.
Usually that's done around the renewal time.
Right.
But again, kind of back to some of the comments we made earlier, Jeff, folks buy things and don't think about them, right? If we ask, hey, Jeff, have you bought a nice watch for yourself, or did you buy your wife a nice piece of jewelry? Sometimes that answer's, yeah, I should probably insure that and put that on my policy. So, do you have any children that might be going off to college next year? Do we need to, evaluate a higher umbrella? Are you planning on buying or selling property within the next year, putting it on our radar a little bit so that way we can follow up with you and make sure that, we're staying ahead of your needs and being proactive about it. All of those points of doing that, even that 15, 20-minute call are very helpful, I think, to not only us, but our clients as well. So,
yeah. Well, that's another benefit to having a proactive advisor partner to help you with these things to the extent you want that level of engagement.
Right. And again, people, different strokes for different folks. Some folks don't think twice about it, and some folks really appreciate it. But again, we're always here to have that conversation.
Yeah. Well, very cool. Well, tell us how the audience can find you. What's the best way for them if they want to learn more about Hunter and Higher Ground? What's the best place for them to reach out to you?
Yeah. So email and phone is always, the two best avenues, I guess you could say.
Okay.
And I'm happy to share my contact information, either directly on this broadcast or.
Yeah. Why don't you go ahead and share it on the broadcast, and we'll make sure it's also in the notes.
Yeah. It's hunter.ewing@highgroundrisk.com. And then my phone number is 404-354-0918. I also try to post relevant content on LinkedIn.
Okay.
I've got a LinkedIn page that it's not the most active page anyone will ever see, but I try to post timely content on there as well as through our company website, High Ground Company. So I would say those four avenues of LinkedIn, course phone and email would definitely be the best place to get a hold of us.
Okay. Well, that's really helpful. Is there anything that you wish I'd ask you that I hadn't asked, or you want to talk about? I told you this was informal, but I'm happy to let you ask yourself a question if there's something you wanted to share that I didn't get to.
Listen, I think going back to, there was a question that I think you were going to ask or you had mentioned you were going to ask rather.
Yeah.
But it was just, what kind of risks are we seeing, now and years from now? And I think, again, one of the things I'd mention, especially to Georgia consumers, is liability risk continues to be something that is an ever evolving topic, right? And we see it come up more and more every day. And just thinking about that and taking into account, how that can really throw a wrench in someone's overall financial plan is important. And
Right.
and we don't see that risk necessarily slowing down.
Right.
I wish it would, but I don't think it will.
Yep.
If we think back to 5-10 years ago, how many personal injury attorney billboards there were. There weren't that many of them, but now when you drive down 75, that's pretty much all you see
Everywhere.
And so, again, this just becoming more and more prevalent in the line of work that we're doing. One other thing to consider too, I would leave our audience with if a lot of times if someone is making a renovation or an improvement to their home, a lot of folks don't think to call their insurance agent. Definitely do. It's important. There's different coverages that are needed in the course of construction. That's something that is important. It can be a big risk. And again, there are different policy exclusions and endorsements that should be considered when someone's doing a renovation on their home.
Yeah, I have a friend in my previous neighborhood whose home burned down while the contractors were on site.
Yeah.
I mean, the fire was caused while they were on site. So that's the kind of thing I guess you're alluding to.
Yeah, it happens. I mean, right. If you're moving into your brand new home next week and a tree falls on it, that's different than having an active home insurance policy in place with no construction. It's a little different. So, just thinking about that, knowing, again, you should reach out to my agent for some counsel.
That was great advice. That's great advice. Well, Hunter, thank you so much for being here. I know I found value in this. I'm sure the audience did as well. And it's obviously great to see you. We look forward to continuing to collaborate with your firm. And you guys, thank you for joining us today. I hope you found it useful. Again, we've got to be thoughtful and proactive about holistic planning and all these areas that, it's not always front of mind. But again, we do need to protect those things that matter. So again, thanks for being with us. Go discover what makes your heart come alive and put the plans in place to pursue it. Take care. Adios. Be well.
Thank you for listening to the Money and Meaning Show with Jeff Bernier, a show dedicated to help you gain the confidence and freedom to lead a life of personal significance and help you get your actions and resources in alignment with what matters most. We would love to hear from you. If you have any questions or comments on the show, feel free to reach out to us at moneyandmeaning@tandemgrowth.com, or you can find us on the web at www.tandemgrowth.com. Jeff Bernier is the President and Chief Investment Officer at Tandem Growth Financial Advisors, LLC, an SEC-registered investment advisor. This show is a production of Tandem Growth Financial Advisors, LLC. All information discussed is general in nature, is provided for informational purposes only, and should not be construed as specific financial, legal, or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Listeners should not rely on the content of this podcast as the basis for any investment decisions. A professional advisor should be consulted and/or independent due diligence should be conducted before implementing anything discussed in this show. While information presented is believed to be factual and up-to-date, Tandem Growth Financial Advisors, LLC, does not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Tandem Growth Financial Advisors, LLC, does not make any representations or warranties as to the accuracy, timeliness, suitability, completeness, or relevance of any information prepared by any unaffiliated third party, such as guests on the podcast, and takes no responsibility for the same.